make sure the people that you're working with and that are on your wealth team, like your tax strategist, financial advisor, attorney, like they should be making you feel at ease and calm about these types of things, not like stressed out. Know your numbers. If you know your numbers, you can't be stressed out.
Hello, everyone, and welcome back to Quiet Wealth. I'm so excited that you have joined me today because I have a dear friend and an amazing guest who is just so smart. And you're going to be blown away by what she has to say about taxes. And we're specifically going to talk about how to write off your life. And I love this whole concept that she's come up with about writing off everything so that you can save money on your taxes and build wealth even better than you did before. But first, if you are new here, welcome. Thank you so much for joining us. Here at Quiet Wealth, we talk about three things. We talk about investing, getting into the game, and leveling up your investing. We talk about business building, and having a business is really important to a wealth building strategy. And then we talk about generational wealth. So, how can we pass the knowledge or the money or all the things on to the next generation to set them up for success? First, I want to welcome the amazing Barbara Schreihans to the show. Barbara, welcome. Thanks so much for joining me.
Thank you so much for having me.
So, Barbara and I have spoken together at several different money retreats for women, and these were put on the amazing Kristen Cantrell. Shout out to Kristen. She's so great at bringing community together, and she would put these retreats together because she herself wanted to learn about wealth building. And so she would bring on really smart people here, and Barbara is one of those smart people. And so it's been so fun to go to retreats together. Most recently, we were in California at a winery in Paso Robles, which was so fun to be there together. But Barbara, I would love for you to just tell everybody who you are, what you do, and why you do it.
Yeah, hi, I'm Barbara Schreihans, and I am one of the founders of Your Tax Coach. And we help business owners and real estate investors save money on their taxes. I started in accounting, and I was working at big, huge accounting firms where their communication was kind of sucky with their clients. They weren't actually saving them any money on their taxes. And I was like, there has to be a better way for accounting firms. So I really started my own firm, and we're kind of like the anti-accounting firm. Like, we don't do billable hours. We communicate really well, and our sole goal is to save you money in taxes. And so it's just been so fun to help primarily female business owners and real estate investors just like save money on taxes. And like you like to always talk about, like, build generational wealth and what to actually do with, okay, we've saved you money in taxes, but now what are you going to do with it?
Yeah, and there's so many cool strategies. I think every time I hear you speak, I learn a new strategy. I'm like, "Oh yeah, I got to implement that one and I got to implement this one." And there's so many really cool ones. But let's start with a couple of the basics. What are some of the most basic tax strategies that you see business owners not taking advantage of?
Well, first, I would say if you're a business owner, like, you have to focus on how you're structured, because how you're structured will dictate how you're taxed. So if you don't even know what a structure means, I would definitely learn up on it. You want to know if you're an LLC, or are you an LLC taxed as an S corporation? Are you a C corporation? All of these kind of like buzzwords out there. Learn a little bit more about what those are and how they can benefit you or hurt you tax wise. I'll say if you're a business owner and you're only an LLC, you're probably paying too much in taxes. So typically we like business owners in most industries, not all, but most industries, they want to be an S corporation. And so switching to an S corp can save you $25,000 a year in taxes just by switching to a different entity, and double that if like you're in business with a spouse. Now as a couple, you're saving $50,000 a year in taxes. So entity is like first what we start with, and then we really dig into like, what are you already deducting and what are some things that you're missing out on? A lot of times we see business owners missing out on home office deductions. People still think those are a red flag. They were a red flag maybe like 20 years ago when nobody worked from home, but now everybody works from home. So like, please take your home office deductions, maximizing your vehicle deductions, and then really using like meals and travel and things like that in your business as well, so you can get more expenses out of there.
Okay, so let's dive deeper into a couple of these because I have some questions too, because I don't know if I'm maximizing things like home office, for example. So, how does a home office deduction work?
Yeah, so as long as you have a space in your home that you work out of, and it can't be a mixed use space. So you can't say like I work on my laptop in my kitchen because
Hmm.
you use your kitchen to cook meals, right? So that's like personal and business, so you can't use that as home office. But let's say like most of us we have an office in our house. You can take the square footage of your office versus the square footage of your whole house. That's a percentage, so maybe 100 square feet of your office, 1,000 square feet of your house, that's 10%. So
Mhm.
now that you have a percentage, you can take 10% of everything related to your house, your mortgage interest, property tax, insurance, every utility. If you have a cleaning
Yeah.
person, a landscaper, a pool person, security system, HOA, anything and everything related to your house, you can now take 10%. But then to top it off, like we always like to coach clients into like what other spaces can you use to increase that 10%? So maybe you can designate a bathroom that is only used for your home office. So maybe you have an
Hmm.
ensuite room that you could use. That'll add square footage. Maybe there's a space in your hallway. I know it sounds silly, but maybe there's a space in your hallway that you only use that part to get to your home office. That's part of your home office deduction. Or
Hmm.
we have a lot of clients that use space in their garage for their business. So maybe like you park your business vehicle in half your garage. Or we have a lot of clients that have written books. So they keep like boxes and boxes of their books in their garage. Well, you can add that square footage to your home office. Make sure you tack on the whole garage square footage because that's not
Yeah.
typically in your house square footage. And that'll increase your percentage. So just finding like cool ways to increase the percentage and then make sure you're tracking like every expense related to your house.
So then, do the expenses related to your house, do they need to be funneled through a business account?
Those will still be paid personally
Okay.
because it's mostly going to be personal, right? Like 90% or 80%
Yeah.
of it can be personal. But then let's say you're an S Corp, because most people should be. If you're an S Corp, you have set up a reimbursement account. So your business is going to pay you a reimbursement for that amount every month. So maybe, you do your whole calculation and 10% every month is $1,000. Your business is paying you personally $1,000 as reimbursement. Since it's a reimbursement, it's tax free to you personally. And then it's a business expense on your business. It's going to say reimbursement account $12,000 at the end of the year.
I love that. Okay, perfect. I learned something today. Thank you for that. I mean, I know I've been doing like the home office deduction, but I didn't realize the way to flow it through your accounts, which is also important. So if it's a reimbursement, then it's not taxable. That's cool. All right, vehicle expense. So this is one that, my husband and I have been having this debate. I'm like, we need a new vehicle. And he's like, yeah, but we use it for, it wouldn't be like only for the business. It would be business and, taking the kids to school or whatever. What's your advice on vehicles for the business?
It really depends. We have this worksheet that lists like 6 scenarios. So it depends on how big of a car you need and how much it's going to be. But typically for a business, they're going to buy a vehicle over 6,000 pounds, which is where you can
Mhm.
get that bonus depreciation.
Yeah.
Now, this year it's 60%. So let's say you bought a $100,000 car, you would take a $60,000 expense this year, even though you didn't pay 60,000 because you probably finance it. So you're not out the 60 grand, but you get 60 grand as a deduction. So that's cool. And we're hoping for bonus depreciation to come back to 100.
No. Come
I
on,
mean,
come on.
especially for real estate, but it'll be good for
Uh-huh.
vehicles too. But if you're going to have mixed use, like you're saying, and a lot of people do, right? A
Mhm.
lot of people can't have only a business vehicle and only a personal. But let's say 80% of it you're using for the business and 20% you're driving the kids to school. And I would say drive to the grocery store, but like I haven't driven to a grocery store in years. I love me some Whole Foods delivery or Amazon 2 hour
Right, there you
delivery.
go.
So maybe 20% is personal. So you would just take 80% of your 60%. You know what I mean? You take your business
Oh,
percentage,
yeah, got it.
that 60% bonus.
Got it.
Yeah.
Got it. Okay. And would you suggest a business leases a vehicle, or is it better to buy one with all cash or finance it? Are there different nuances for each of those?
Yeah, it depends on size of the car and how you're going to use it for sure. But typically, I will say lease a car if it's under 6,000 pounds and it's
Okay.
expensive. So if someone wants like a sports car, then it's typically better to lease it because it's going to be expensive and it's not going to be 6,000 pounds. And you can write
Mhm.
off 100% of your lease payment. Well, 99% of your lease payments. There's like this weird lease add back, but it's like very minimal, like $50. We'll just say you can write off 100% of your lease payments. So that's better for an expensive car payment. But if it's an expensive car that's over 6,000 pounds, you get the 60% bonus. So that's better to finance it. I
Mm.
typically don't like to say buy cash anything because I'm a big fan of leverage. And like as long as your interest rate, is like less than 9% or something like that, then I would say just finance it rather than paying
Mhm.
cash. Plus, interest expense in the business is an expense. So the interest you're paying on your car loans, or if you have a building or something like that, all of those are a deduction.
I love it. I would love for you to explain vacations. How do you write off vacations? Or well, let's not call it vacations, travel. Let's call it travel.
Good catch, because I was going to say you cannot ever write off a vacation, but you can write off business travel. And that's like one of my very favorite things to do. I love traveling. We just got back from a 6-week business trip. There are so many different ways you can write off your various travel. You just have to think about it beforehand before you leave. Don't like look back to last year and be like, oh yeah, I'm going to count the trip to Disney World as a business expense. It doesn't work, not because it was Disney World, but because your intent when you went wasn't for business. So
Mm.
your intent before you go has to be for business. Now, what about it makes it business is the next question. So that could be so many different things. It could be for networking. It could be for marketing. Maybe you have a photo shoot, a content shoot, you're shooting videos. Maybe you are researching a different real estate market. You're going to the Chamber of Commerce. You have a retreat. You're going to a conference. You are going to some sort of educational class or continuing education. There's so many different ways to make travel business related. For our big 6-week trip, I won't go into every day because that would take forever, but the first week of it, we took our creative team. So the whole first week was all creating content and team building with our creative team. And then we had a couple weeks where we were meeting with clients. We had photo shoots. Then we had a week in Cancun with our entire 30-person employee team. And so all of that was either we were having business meetings, we were having board meetings, executive meetings with our exec team. We had a huge photo shoot with everyone, and team building was built in as well. I always say like 90% of your travel could probably be a business expense. You just have to think about it a little bit ahead of time.
Yeah, you just have to plan it and be intentional. I mean, even for me in my business, my family is part of my business. They are employees of my business. And so when we go as a family and we travel, we are intentional about making it a business trip as often as possible. And we'll have business meetings when we're traveling. We'll have content, photo shoots, and content creation. And then we'll intentionally travel around conferences too. If I have a conference in Florida, for example, then we'll take the whole family, we'll have a business meeting. Mom will go to a conference one of those days and then write that off as a business expense. And so I think one of the things to just to note, like, I guess just to fully back up a little bit and just make sure our listener understands is that we're kind of flipping the script here on the way money flows. Was when you're a W 2 employee, you get paid, but you don't get paid till after you pay taxes, right? So the money comes in, you pay taxes, and then you use it for your expenses. But when you have a business, and this is why I say everybody needs to have a business, you get to flip that script. The money comes in, you get to spend it, and then whatever's left over, you pay taxes on. And so it's a critical component to building wealth is having a business. And then, of course, like Barbara says, you have to structure it correctly. You have to set it up as a S corp. And so that's what. So my business, Steady Stream Investments, is set up that way, and that's kind of how we roll and do. But there are so many tax strategies. So I want to talk about another one. We talk about generational wealth here on the podcast. So, Barbara, what tips and strategies do you have for those of us who are thinking about how can we pass on to our heirs? Like, what are some of the big mistakes that you see people make in
Mhm.
terms of passing on inheritance?
Yeah, the biggest one is giving your kids real estate before you pass away. In most cases, this isn't for every case, but don't add them on to your house until you pass away. Because let's say you bought a house for $100,000 and real estate always goes up a little bit every year. And let's say now it's worth $300,000 and you're still alive and you're like, I want to share the wealth with my kids and I'm going to add them to the house. Well, that's a taxable transaction and you might have to pay taxes on that $200,000 of gain between the 100 and 300. But let's say you waited until you passed away and then they inherited it. So maybe you pass away and now it's worth 500,000. That 400,000 gain between the 500 and the 100 you bought it for, your kids would have to pay nothing in taxes because they inherit it for the fair market value of what it's worth on the day that you pass away. So they could sell it that day, pay nothing in taxes, or ideally they hold it and maybe now they have a rental property, or they just use it and, have lots of good memories in there from when you were alive. But they can hold it and maybe now it's worth 600 when they sell it. They would only pay taxes on the $100,000 of gain between the 500 when they inherited and the 600 that they're now selling it for. So that is a huge, huge tax strategy. Now, I will say Biden's tax update, if he's reelected, he's trying to get rid of that rule. There would be a tax when someone passes away if you don't sell your property. So if you inherit a property, there's going to be a phantom tax assessed, which I think is crazy because nothing was bought or sold, nothing happened. But you have to pay taxes on it. So that might go away. But for now, that's one of the really, really cool real estate strategies. And then I would say for like most younger business owners, a big mistake I see is not paying your kids in the business, which you mentioned, your kids are involved in the business, you pay them. That's amazing. We love if we can figure that out for every one of our clients. And you might say like, well, what can a 5-year-old or a 7-year-old or a 10-year-old do in the business? Kids are very capable and there's a lot that they can do. Even like 5-year-olds can scan receipts for bookkeeping. My 6-year-old takes every good photo that you see on my Instagram is my 6-year-old. Like if you ask my husband to take a photo, it is so terrible. Like he just does not care about that kind of stuff. But my 6-year-old, for whatever reason, has the best photography eye. So like you can do that. They can manage your social media, a lot of things. So pay them in your business and then contribute to a Roth for them. I actually just this morning, a client started a Roth he has 3 kids, 3 girls. He maxed out their Roth for last year. And he's like, I think I'm just going to do it once. How much would that be worth? I went on, NerdWallet has great calculators. So I just went on NerdWallet and put $7,000 contributed to a Roth when someone's 5. And what would it be worth when they're 65 when they retire? So just a one-time $7,000 contribution. How much do you think it's worth at 65?
Oh gosh. A one time?
One time, that's it.
500,000?
Close. Almost 700,000.
Wow.
From just you contributing $1,000.
How many X is that? I can't calculate.
100X.
Yeah, 100X. Whoa.
Imagine if you did that every year, right? Every year your kid, but he's like, no, he's like, they'll be good with 700K. I'm just doing it one time. Okay, that's cool. Like everyone has their own goals,
Right.
But like that's crazy that you can build that much wealth for your kids.
Yeah, it's wild what can happen. It's shifting the taxes too, because those kids are not taxed on that money, right? That $7,000 you paid your kid, they're not taxed on it. They don't have to be taxed. It's up to, what is it? What's the figure this year, Barb?
14,600. So kids can be paid up to 14,600 this year, 24, without being taxed on it. As long as they're not paid through the S Corp, you have to set up a different company through a family management company. If it's paid through an S Corp, they have to pay payroll taxes on it. And it has to be your kids as well. So if you have grandkids maybe that you want to take care of, you can still do that, but you have to pay the parents first a 1099. Now the parents have a business because they get a 1099. And then that business will pay the kids to zero out that 1099. And that's how you get away, because the tax-free for kids is only for your own kids. It's still possible for others. You just have like a little workaround.
And that's only until they turn 18?
Yeah. At 18, everyone has to start paying Social Security, Medicare. So
Mhm.
it's not that it's not tax free, it's actually still federally tax free, but you have to pay Social Security, Medicare, which is different than federal income tax.
Right, right, right. So, I mean, it's still a good thing to do, right? So, if you have older children who are working in your business, you can employ them and have them work in your business. And it's still a really great thing for the older, the young adults as
Yeah.
well. They can take advantage of that. But yeah, I mean, definitely like the power of investing young. We all learn about it and we all talk about it and stuff. Probably because none of us did it when we were young. And now we're like, holy crap, this is amazing. Let's
I
make sure
know.
our kids get this is super powerful. And so for us, like in our situation, instead of doing a Roth IRA, we helped our kids invest into a real estate property. And so that real estate property, we shifted income to them. All the kids just invested together into a property and now they are earning passive income plus appreciation. And so we have that asset going for all of our children. But the Roth IRA is super cool too because they're starting to make it a little more nimble, right? I think they're allowing kids to use it for college. So you don't
Mhm.
have to do the stupid
529.
429 plan, or 529, whatever it's called. I hate it. That's soapbox for another day. But
Yeah.
they can use it for that. But I think they can also use it now for first time home purchase, correct?
Yeah.
You just layer the strategy there. You open up their Roth IRA, let it build for 10, 15 years, help them get into their first house hack where they go in and they buy a duplex or fourplex, they live there. You only have to put like 3% down, maybe 5% down. The kid lives there, they learn how to be a landlord, they learn how to manage a property, so it's educational as well as them living there for free and building wealth. It's just really powerful when you can start layering all these strategies.
And just to make it more complicated, you can get a self-directed Roth IRA.
Oh,
So then,
yep. Yeah.
then you could buy real estate from your Roth. And then,
Yep.
as you know, Roth accounts are already post-tax. So you could buy a property for 100K, let's say, in your
Mhm.
Roth. And then now it's worth $1 million. You sell it tax free because you bought it with a Roth. Like, just so cool. There's just so many different
Uh-huh.
things that you can do with it.
That's what's so fun about this tax game. And I know you and I nerd out on this all the time because we love it and we're these finance tax nerds, but it's just so fun to learn the game. And I growing up, like me and my brothers and sisters, like we're big strategy game players, like board game strategies. We love that stuff. And I feel like I'm in like a real life one with the tax game and trying to figure out all the different pieces and how to really write everything off that we can. This is like the tip of the iceberg. There's so much more that we could go into. So tell me more about the course that you have right off your life.
Yeah, our Write Off Your Life course teaches you exactly how to write off your life in your business. So we go into all those fun deductions like travel, meals, adding your kids to payroll, having board meetings and how important those are, but also how to make it a really fun tax strategy. So anything and everything you can think of, like I took my 14 years of tax seasons and I wrote down every single expense I could ever think of, like how to write off your pool and your dogs and like literally everything.
Your
And
clothes.
clothes, photo shoots, like there's hundreds of deductions in this course. So it's really like my baby. It saves people tens of thousands of dollars every year. So we
Wow.
have that course. And then from that course, another baby came about called Write Off Your Real Estate. So then it was like we helped so many real estate investors that they really needed every tax strategy I could come up with from my 14 years of buying properties, selling properties, holding properties, if they have a short-term, mid-term, long-term rental, syndications,
Mhm,
anything and
mhm.
everything, any scenario. It took me over a year to write the course, which is probably why I still haven't written a dang book because I keep writing these courses. But that real estate course teaches you like every single real estate strategy. So we love all of our courses. They help so many people and they're just so fun.
That's so cool. I mean, not only do you have like courses that you can learn from educational wise, like your whole business is a tax strategy business where, people can come in, they can sign up with you and your team will look at your individual situation. Because one of the things I always say to people who would want to invest with me and they want to understand their K1s, for example, I'm not an accountant, so I can't say, oh, this is how you manage it, right? We always say, give it to your accountant. They know your personal situation, or check with the CPA, because everybody's personal situation is nuanced and a little bit different. And this is what I think is the beauty of the business that you have built, is that you can help people navigate that. That's pretty dang awesome. And so I recommend you guys all the time, to every investor that I talk to, say you need to go see Barbara and her team, because they will take care of you and help you in so many ways. Paying for a brilliant advisor like you and your team is a no-brainer for anybody to really get what they need out of you. So I'm so grateful that there's people like you out there helping people like us to figure out the tax game. So you have something else super cool that's coming up. You have a retreat about wealth building. So tell us about that.
Yeah, our big annual event is called Minted Wealth Live, to get your wealth in mint condition. And so previously, this event was only for our strategy clients. And so all of our strategy clients would fly in, we would help them through tax strategy, and they would have check-ins with us individually in person, which normally they're like on Zoom. So it's cool to meet everyone in person.
Mhm.
And then all of them were like, we need to bring all of our friends to this event. And so this year it's available to any and everyone. So if you're a business owner, real estate investor, you definitely need to go to Minted Wealth. It's November 4th in Scottsdale. We have an all-female speaker lineup, which is so fun. And we're going to talk all things finance. Of course, I'm going to talk about tax strategies and how to save money in taxes, but then we also have wealth building, we have real estate investing, how to set up your estates, and financial planning and advising as well. So the event's going to be so fun, November 4th in Scottsdale, and you can go to mintedwealthcollective.com to get your ticket.
Perfect. Perfect. Awesome. Okay. We'll make sure to put a link to that in the show notes. If you don't know Barbara yet, you need to know her. You need to follow her. Follow her on social media. What's your social media?
Your tax coach
Your
everywhere.
tax coach. Everywhere you can find her, your tax coach. Any final parting words, for like words of advice for the business owners out there who are trying to really level up and get in the game better?
You're probably feeling like overwhelmed listening to this podcast. Like we went through so many different deductions and strategies. You're just like, but it doesn't have to be overwhelming. And so I would say make sure the people that you're working with and that are on your like wealth team, like your tax strategist, financial advisor, attorney, like they should be making you feel at ease and calm
Mhm.
about these types of things, not like stressed out. And so if you just need someone to help ease your anxiety, I would definitely reach out and really like know your numbers. If you know your numbers, you can't be stressed out.
Yeah. My advice is always like, one day at a time. Get one strategy implemented and then move on to the next. You don't have to do everything all at the same time. And it's okay if you miss out on one and this year, but then you get it implemented for next year. I think it's just like a learning journey for me. I feel like it's just like a stepping stone. And when you know better, do better. That's what Maya Angelou said. Barbara, thank you so much for joining us today. Really appreciate all of the advice you gave. This episode is so meaty and full of many tips and tricks. So always appreciate you being with us. So thank you.
Thanks for having me.
All right. So thanks so much for our listener today for joining us. We appreciate you being here. Remember, please share this episode, because this one especially needs to be shared with friends that you know and love. So thanks so much for joining. Bye for now.